Watch Tool, and yesterday the Fed Watch Tool was pricing at a 40% probability for a cut at the December 8th meeting, and then it fell to 37 this morning, and then 35.9 by this afternoon. So the probability for that rate cut is actually being pushed out into the future. The CME is going to have to make their Fed Fund futures table longer pretty soon here because we're not going to see it at all on the screen. When you're looking at the regime tool that we're using, it's really interesting what has happened over this last 5 to 7 trading days here. When we were coming out of an inflationary bust, and for all of April, all the way up until Friday, April 24th, the regime tool was, for us, signaling a boom. And this is the distance that it traveled. From beginning of April all the way till April 24th is when it took a turn. And what I did here is I looked at the close on Friday. So this was this entire move here all the way through April. This absolutely monster move. And on this Friday, as we went into the close, not on Friday morning, but on a Friday afternoon going into a Monday, we had witnessed the regime tracker change. And what it essentially, where it turned to was into an inflationary bust. And then since then, it's never recovered into going over the line into boom. And what's fascinating about that is that this whole distance that we traveled on the indices on the ES, and then Friday after that close, where have we traveled? Nowhere. I mean, we really haven't gone anywhere since then, have we? Previous 7 days prior to that, we put on, 100, 150 points. But we lost momentum. And what I'm excited about is that regime tracker kind of captures that. In relation to the S&P 500 priced in crude oil and gold, compared to the bond markets. And essentially what this was measuring is that money is actually, the dollar is actually getting, it's good for the currency. The dollar, there's a dollar strength trade that's going on. And it's perceived that bonds are actually a safer haven right now than gold. If you read, this deflationary bust lower left, it's energy inefficient, crude oil rising, the S&P 500 are going nowhere. It's out. The gold energy is outpricing outperforming the S&P 500, and then the bond markets are outperforming gold, at least on the shorter term. That's what it would suggest. So energy inefficient, good for the currency. Prices and volumes fall. There's a possible debt crisis in this type of environment over the longer term time frame. What you buy is safe government bonds. You sell everything else. And what's interesting about that, and I'm giving context here because we're inside of this absolutely massive monthly support level for the dollar. And we know that about every fourth year, the dollar goes into a strengthening phase. Some call that the credit cycle. Other people, they're more familiar with the crypto cycles, call it the crypto winter. It does affect the broad markets to a lesser extent, of course, than it does for the crypto or even the metals. The stock market. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.